And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook on this yet another super slow news day in 2022, joined by Dan and Mick and Hogue. Today, overall, we're talking about some long-term technical indicators, but I have a feeling that some other current event stuff will have to be addressed. But first, Mick, you got any shout-outs for us today?
I do. Shout out to Matthew Panuzzo, up a little over $2,800 over the last 2 days, Tuesday session, trading the NASDAQ. So big shout out to him.
Great show. Yeah, so over the last few weeks, we've been talking more about getting into the charts and looking at some of the technical analysis things that we look at when we're doing our trading. And I believe it was Dan who came up with the idea today for long-term technical indicators. So we've done some stuff with moving averages. We did death crosses last week. So now we'll probably go into some swing high and swing low stuff, some longer term trends, and go from there. But first, the topic du jour, what the hell's going on in the world right now? I'll leave it a wide open question. Mick, you want to lead us off?
Well, sure, I will. Since I'm always last, that's why I'll take it first.
Mm-hmm.
I mean, the thing I'm, maybe losing a little sleep over every single night is the Russia-Ukraine situation. And, I think that news, everybody's waiting to hear, what's next on that news feed, as far as what it could do for our equity markets, our energy markets. I don't know. I'm just following along and listening and keeping an eye out, checking the markets overnight much more frequently than I normally do. I'm a little uncomfortable with what might happen over there and what it can mean for us and our markets and the traders that I, have accountability over.
Yeah, there's definitely a lot of, I know that Biden's speaking about a half an hour from now, and there's just a lot of headline risk out there. So definitely be aware of that as you trade. But on a larger point, it's kind of, and I hope I don't get, stabbed with an umbrella tip full of polonium for this, but I don't know why we're doing this necessarily. Like, come on, this is like, yeah, I thought we had already settled this. Dan, you got any thoughts?
I have a lot of thoughts. For the most part, I'm going to keep them to myself and not really get too vocal with them. I have a background in the military side of things, so that's where my head instantly goes. This is a frightening situation. You got a major powerhouse with Russia. That's just not just Russia. There's more involved there, right? Their biggest ally. Got to think about that one. I've got bigger concerns than just what happens to the markets, just to be blunt. I've got a lot of friends still active duty, and I don't know. I'm a little on edge.
Yeah, and we'll go around the horn to Hogue. All of it just seems, it just reeks a little bit of desperation and things like that. Because on one hand, if we're just talking from like a purely economic sense, I think that, like the Russian economy these days is like the size of Italy or something like that. Or I heard say like 1/3 the size of California's economy. So I'm not sure, and I don't think anyone really is, what exactly, what would you say you do here? Like, what is the goal here? I don't really see how this can work out well for, your average Russian or Ukrainian or anything else. So, Hogue, any thoughts before we get started?
Yeah, the whole thing just makes me sad. I don't think that aggression towards people for gain or loss of property is something that we should be engaged in. And, I know that other people have ideas and things that they want and land and all that stuff, but it just doesn't seem um, enlightened to endanger people's lives, especially civilians, just people trying to live their lives. And that's makes me sad. And I keep praying for a peaceful outcome for all of this.
Yeah, it just seems like such an old school, like I wouldn't expect in 2022 this sort of thing where it's just very, I thought we were sort of beyond, putting a bunch of troops on a border and then being like, we're not going in, we're not doing this, we're just doing military exercises. And then like, well, actually we are, because anyway, I won't go too far on the rabbit hole there. But there's a lot of historical parallels to a lot of other things in the past. And I just hope that, that obviously that this is going to go on for a while too. If you're thinking about like trading and stuff too, I was hearing experts better than myself this morning saying that, this is going to go on for like a year. And sort of like the big economic news so far, it'll affect the energies and stuff you trade to, is that Germany halted participation in Nord Stream 2, which was this natural gas pipeline that, I don't know, it's a whole other question of why they thought that was a good idea to begin with, but that's a huge, that's the biggest thing so far, but we'll see what happens this afternoon. And from that, I guess, unless anyone has any other thoughts, we can start looking at the market a little bit. Mick?
Yeah, I just one little thing to add. Jack, you mentioned this being, headline topic basically. It's not, we're talking about it today, but it's been a headline topic for a while. So, people always price in uncertainty in the markets, and, these sell-offs in equities, something that, we could attribute to, partially to these headlines that we've actually had for, quite some time now.
Yeah, it's been sort of like the frog boiling of invasions where like, the equities are down today, but it's not getting, monkey hammered like you expect, because this has been slowly unrolling for the past couple of weeks. And
yeah, to challenge you almost in a way, like, would you expect it to get the hammer, the monkey hammer today, just because we're getting more of the same headlines we've been having?
Well, it did get like off the open when I checked last night. It was getting pretty hammered at one point. I would have expected maybe a little bit more, just because I think that the market's a discounting mechanism and it's all based on the probability. And I think there were at least some probability that this was just going to sort of like disappear. Like it wasn't like that it was a bluff and it was just going to kind of go away. We'd have a big bounce or something like that. So now that it's kind of on, I guess, we'll have to see what happens next. This is going to be an interesting and maybe trying next couple of weeks for starts.
I would say so.
Yeah.
Certainly gone beyond just brinksmanship.
Yes. Yeah.
Well, we do have a question that kind of brings us into some ideas of trading and the idea of long-term trading too, right? Devon's curious on this topic. Might the Fed actually reconsider the 25 to 50 basis point raise next month? Is this going to be enough to possibly influence the Fed?
This now, as it stands, probably not. But things could change. I don't know how much. I think a lot comes down to what these sanctions end up being and things like that, because that could, we do have inflation and supply chain disruptions. And if we start having, my understanding is that sort of the biggest sanctions that can be given out, sort of like as far as we can go with sort of an economic thing, is basically kicking Russian banks and people like out of the world banking system, really. And if something like that, and if like Switzerland is on board too, but the Swiss are famously try to stay out of these things for their reasons.
Classic term. I'm in Switzerland.
Yeah, exactly. That could, I'd have to think through more about what that could be, but that's definitely going to affect markets and things like that. But also, say asset prices do take a big haircut, like equities and things like that, those things cool off the economy too. Things like, take inflation, for instance. You're basically just, it happens when things are overheating, basically. And this would be the opposite of overheating. So we'll have to see what plays out in the next couple of days, weeks.
Yeah, I think as it stands today, the Fed's not changing. I think, there's a lot of changes probably going to happen over the next few weeks that may have some influence, but it's one of those things, time will tell. You can't really plan that now.
And we do need to raise interest. Frankly, like, this is a little bit of punditry, but we do need to raise interest rates anyway, right? We can't, there's a danger in going on with basically zero interest rates for too long, because then if you do face some sort of cool down or recession, you can't really cut anything to stimulate it.
Well, I might be buying a new house soon, so I'd like to keep interest rates low. Just throwing that out there, personal thing, kind of like why I hate seeing oil go higher, because I like filling up for cheaper.
Yeah. So, Dan, on that, should I share my chart now? And we can kind
Absolutely.
I'll let you kick us off with some of the stuff that you look at here. Let me do the old screen share. All right. I'm going to delete some of these guys from a couple shows ago. What we got here is the S&P chart. And Dan, when we're talking about long-term indicators, I'm on the day candlesticks now. You want to break down kind of what you're looking at as far as those go? I know you're talking about swing highs and swing lows and so forth.
Absolutely. Well, I think right now you can see one of the most visual things down below, right where the market's trading, right around that 4,300 mark. That should be indication number one, right? When we see that market start to double top in the beginning of February, we're starting to define some sort of channel. And when we break in middle of February here, we start to see this market rotating lower. Where do our eyes instantly go? Well, these markets are super visual, and you can look at this from a 1-minute chart, which I don't recommend, to a daily, a weekly, a monthly. You can constantly see visuals, and swing lows and swing highs are going to be the first thing that you like to see. I love them. I think they're super important areas because I'm a channel style trader. I look for markets to be within certain channels, and I like to define my little range. And all I'm trying to do is fade extremes. And using higher time frame, those are where really I come in as a trader. I don't want to get caught in the chop every single day, keeping things too tight. I like to look for bigger opportunity. And so when I see the market starting to come rotation towards these 4,300 level, which we've seen now multiple times over the last few months, I really like to see this market potentially see if we can hold here. If I see this market holding up, we may see nice rotation back to the upside, and we may start to see this market create a channel. Now there's extenuating factors as we're sitting here today. We just spent the last 10, 12 minutes talking about the concerning things going on with Ukraine and Russia that we do have to be cautious of. But if that's not involved, and you can use this type of trade, when you start to see markets come down here, you can start to make an adjustment. Okay. We've seen for the last 2 weeks, this market's been rotating lower. We've been in a downtrend. If you're not a downtrend trader, this may be where you're going to start to look for this market to start to rotate higher. Again, you got to look at it from multiple facets, right? You got to think about what's going on economically, geopolitically, that may have an effect on this and actually continue to send this lower. But right now, the way it stands, I'm happy with where this market is. I like it seeing it hold at that 4,300. And I need to see a day or two of continuation to the downside, continuing to make new lows before I'm willing to say, okay, we're actually going to continue to break and this market's going to go into downtrend. For me, we're just in a nice sideways pattern, basically since the start of the year. And that's how I'm going to go ahead and go about trading this. With that being said, there's always opportunity, right? Everyone looks at it a little bit differently, but everyone sees the same thing. Markets are so incredibly visual, and looking at the higher time frame, you get an idea of where that market's trying to get. It's not all about, hey, here's my shorts and here's my longs, but really, where can this market go and what's it going to take to get there?
And you can look way back, going way further back still. That 4,300 is kind of where we seem to be finding a bottom, since it came through it. This goes all the way back to July of last year.
Mm-hmm.
Do do you change, Dan, with the things that are going on with the headlines and things like that? So this, if you're looking at this channel, it looks like you kind of like buying this 4,300 level, for instance. Do you change the way that you do your stops on that, given everything that's going on? Do you have more of a headline stop, a time stop, or just like a level below this that you would look at? Because we haven't had any closes. We're right at it right now. We're at 4304. It doesn't look like we've had any closes that have been below that. So what are you thinking there?
Well, a couple thoughts, right? Number one, if I'm looking at this from like a long-term trade, if I'm looking for something that I'm going to sit in for a while, that's the question I have to answer first. Is this a trade that I'm going to take, that I'm going to sit in for a couple of days, maybe even a week? Things are a little different, right? Then I'm going to give myself some room. I'm willing to take that risk because I'm also going to be a little bit more covered in the trade that I take. I'm not going to just jump in and outright and say, hey, I'm going to go long S&Ps outright without any protection. If that's the case, then yeah, I'm actually going to extend my stop a little bit because I do want to see what I want to give it some elasticity. I want to give this market some room to move through. If I'm going on a shorter time frame, that doesn't change anything for me. I'm going to use this now, and I'm going to use the lower time frame charts to see, am I starting to find some sort of bottom here? Can I catch a long position to the upside? If I start to see some weakness, can I take that as a long opportunity? And I'm going to go about it just like a normal trading day. But again, right now, it's keeping that cell phone in my hand with all my news apps with the alerts on. I'm paying close attention to that. I just got one a couple of minutes ago, and all I saw was Black Hawk helicopter crashed. And then I get a little concerned, and I got to kind of read a little bit closer. It happened here in the United States, so we're okay with that. But those are the things that, for me, if I'm going to be in these trades around times like this, I got to be kind of running both facets, right? I'm going to have a technical stop for protection to be smart about my trading, but I'm also going to have some sort of news event style trigger ready to go. If something does happen, I got to be willing to get out of that trade.
Hogue, what about you? What are you looking at? And I can go to a different product too, if you'd like. But as far as long-term technical indicators, what are you looking at?
John?
Uh-oh.
I think he froze.
John's frozen. He
or
wants
he's
to
just
turn it over
really,
to me.
yeah, he's really pondering. Well, Mick, while Hogue ponders this in stasis for a while, what are you looking at? And I can go to whatever chart you want here.
Yeah, thanks. John's collecting his thoughts so he can have a more educated, spiel than I do. But, I'm with Dan. It's the swing highs and swing lows. And when you're talking technicals on a higher time frame, trend is always, extremely important. You need to know the trend. I'm looking at this S&P chart right now, and as far as the fluctuations up and down from swing highs and swing lows, we've been in a bull market, call it that. However, now we're starting to see the market put in some lower highs. So when you start seeing the market print lower highs on these swings, then, as you get a couple of those, 2, 3, you can start to say, we might not be in a bull market anymore because we are seeing the market making lower lows and lower highs. So I always look at that. I was really enjoying it when, we're talking about this area of importance around the 4,300 from end of January. But then if you go back and look at October of 2021, it's another area of importance in a congestion area. This is important. This is a level. I have a big box going across my, my weekly chart there, or daily chart, excuse me. When it comes to high frame technicals, you need to go do the top down approach and look at, maybe a monthly, definitely a weekly. It can really give you a lot of important value areas or price areas as you go back. When it comes to the indicators that we talked about last week, we said that those are tools, those are reference points for the most part. We're not, taking trades when we're getting the death cross or the gold cross. I like in higher time frame technicals or just looking at charts, I like seeing areas where in an uptrend after making new highs, I like pullbacks. I like seeing, this market made new highs on today's Tuesday. So, Friday, hypothetical example, market made new highs on Friday, then Monday's a sell-off day, Tuesday's a sell-off day. Come Wednesday, you know, I think that if you want to continue in the direction of the trend, you know, going long after a few days of high to low price action is a very good play. You guys know I shared a crude, not a crude oil, a natural gas trade with you from a couple weeks ago. You know, natural gas had made new highs. There were 2 big days of sell-offs. I went long. It didn't work out. But that's the kind of stuff that I'm looking for. Just so happens that, you know, natural gas, after, you know, traded against me and I had to puke at a pretty big loss, it's turned back up. And now we've had 2 days high to low more recently too. So those are really some things that I'm looking for as far as indicators on longer term technical patterns. I like looking at the oscillators. I want to see momentum. I want to see changes in momentum and catch those oscillators, you know, turning up or turning down to try and jump in on, you know, the beginning of a new leg up or leg down. I also think that, you know, I don't really think of bull flags and bear flags all that much when it comes to looking at a daily chart or a weekly chart. But I do really like on higher time frame charts, these congestion areas or sideways triangles, as I like to call them, where you have some consolidation around a certain price. You see that price starts to converge into a pennant or a sideways triangle. And then, you know, you look for breakouts from one end or the other. I think those can be really, really powerful. Timing is very important. And, you know, like with any trade, calculating your risk is very important as well. Going back to the swing highs and swing lows where Danny, you know, kicked it off and I started off, you know, every swing high or swing low is a price point that people are looking at, especially on the higher time frame. The people, the institutions who are moving big money and, you know, aggressively buying and selling, people that are moving the markets, they look at those. And, you know, people, intelligent people will look for tests of those swing highs and swing lows, and they'll look for continuation above or below swing highs and swing lows. So I really, really like the swings. I remember when I first started trading, you know, I'd see a swing high or a swing low, and I was in the mindset like, oh, that was resistance up there. And I'd put my stops above or below the swing highs or swing lows. And, you know, they always seemed to probe, you know, up there or down there, and I'd get stopped out, and then the market would come back, you know, on those tests. So if I could share a little wisdom from my own failures, it would be, don't look at those as support or resistance levels. That's what the congestion areas are. Last thing before I go too long here is I really also like looking at weekly charts and trying to assess price bar overlap. Because as we see, whether you're looking at a 1-minute chart or a 5-minute chart, we see a lot of back and forth. You know, very rarely do markets ever just explode in one direction, but we see a lot of price overlap. So I like seeing, you know, situations where I'm getting in after, you know, the market ticks up, but then we have price bar overlap on the week to the downside. And this week, you know, we didn't quite make it all the way down to last week's lows. You know, then if you just look at the colors on the chart, you could say, you know, maybe this is a good area to go long to see if we get, you know, the price bar overlap back to the upside, and maybe we could take out the previous week's high or something like that. You know, finding those opportunities where you can have a long bias, whether or not you're holding it for a week or you're just working the long side of the market as you're day trading for that week, can be really, really powerful and, you know, lucrative.
Thanks, Mick. Very informative there. Hogue, you're back. You were frozen for a little bit.
Took your spot, Hogue.
Yeah, I don't know what happened. It's raining so hard here. I think it ate my internet for a minute.
Yeah, it is a gloomy day out here in the upper Midwest where we all are at the moment. So Hogue, we were just going to see if there's any longer term technicals that you wanted to point out here. Mick was talking about price bar overlap, swing highs, swing lows. We talked about moving averages in depth over the last 2 weeks, really. But is there anything else that you'd be looking at here?
Well, first off, happy 2/22/22,
Glenn Lerner.
everybody.
Happy Tuesday.
And they covered so much, I forgot what I was even going to say. They were so thorough. So the only thing that I might add to it is, you know, even as a day trader, even as a short time frame trader, I kind of look at every trade from the longer time frame. I'm always trying to monitor, number one, what direction the market's attempting to go and how good of a job it's doing getting there. It's always part of the auction process. It's always, you know, a study of volume, of open interest, of, you know, looking at the charts in longer time frames to see, you know, is the market directional in longer time frame, or is it range bound in longer time frame? And looking at, you know, a directional market, say for example, the market's been moving higher over time, monitoring the health of that auction to the upside. Also, you know, looking to take trades when the market exhibits weakness to take longs, which are you're going to be your bigger opportunities in a market that's moving higher over time. Opposite, of course, you know, when the market's moving lower over time, you're looking for opportunities to sell strength unless the market's range bound, when you're really focusing on the extremes. And, you know, these extremes and these trending markets are very prevalent, sometimes in daily and sometimes even weekly or even monthly charts. As far as swing highs, swing lows, those are things that everybody is looking at. Of course, they're going to be useful for us. When I'm putting together the weekly kickoff levels, there's a lot. Sometimes, you know, those are going to be the main levels that I'm looking at, but it's not just the swing highs, swing lows. It's points of control that were left unchecked. It's series of weak highs or weak lows that attract price. So, you know, going, you know, maybe in my own way a little bit deeper than just looking at the swing highs and swing lows is what happens. You know, are there naked points of control there? Is there weak highs or weak lows, or is there good excess down at those levels? You can see on this daily chart right here, you know, we go back to October, there's excess at those lows. That 4,300 level never really got closed below. So every time we got down there, we rejected. That's excess, you know, that's rejection of price. We get back into February and we see the same thing. We see some deep moves below that level, but every time we get down there, the market finds buyers. The situation's a little different now, but still, you know, we're looking at that saying, okay, well, we found buyers back there before. Are they still here? If they're not, where does the market break? You know, you guys are looking at 4,300. My weekly kickoff low is 4,283, which involves a naked point of control that remains unchecked down below there. So that unchecked point of control is a comfort level that was left back there that traders will try and get to if the market does head in that direction. So, you know, these are zones. Everything we talk about is a zone. 4,300 is a zone. 4,283 is more of a zone than an exact number. And they're pretty closely related there. I mean, looking at the bigger picture, you got a zone of 20 points there. A big zone for a day trade, but maybe not such a big zone for a longer time frame trade. So, you know, a lot of this depends on your, you know, Dan's looking for bigger, longer time frame trades. I'll bet you there are times when he's risking 20 points in some of these longer time frame trades.
Oh yeah, absolutely. Well, thank you for that, Hogue. Obviously, we
bet
babbled for a
correctly.
while because we love talking about these charts. So I think that's probably where we'll have to end it for today. So Dan, do you have some inspiration for us in these times?
I do. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. That comes from Bill Lipschutz, which I think is about as true as it gets. You know, you see way too often people just taking anything that, you know, they see it move, they pull the trigger. Sometimes it's just a tumbleweed rolling in the wind.
Well, yeah. You talk about the whole, you know, we were talking about 4,300 level a bunch, the entire, you know, we've been on it for half an hour, and I think I've just seen it within about 5 points of either side of that, just kind of hanging out here for the time being. So I think a lot of people, there's a lot of uncertainty going on. So as you mentioned, Biden's about to speak. We'll see where this goes. So everyone out there, have a nice week. Stay safe. Trade well. Hogue, you want to send them off?
Yes. Trade safe. Always use stops. There's always opportunity. That's just a fact. But today, be good to yourself, be good to each other, be kind, and say a prayer for world peace.